In this presentation, we will work a more comprehensive problem related to the Capital Projects Fund and the government-wide activities. We're going to have the information on the left side. We're going to enter that information into the blue area on the right side. We're going to enter that into the general journal, then post that to our worksheet. Our worksheet being a trial balance, the trial balance in order, assets, liability, what would be the equity section if it was a for-profit organization, and then what would be the income statement type items if it were a for-profit organization. Assets minus liability section here, fund balance section, and we have the assets in green, liabilities in orange, what would be the equity section in light blue, and what would be the temporary accounts or income statement accounts in dark blue. We'll also record that information into the government-wide activities, journalizing the journal entries, and then posting them to our worksheets as well. Then we'll take a look at a few of the financial statements, the balance sheet, the statement of revenues, expenditures, and changes in fund balance. The first thing we're going to do is hide a few cells. So we're going to work with this sheet right next to our data, and we're going to hide the sheet next to it that we will get to at a later point, and this is going to be helping us to optimize our space. So what we want to do is go to this cell I. I'm going to go to I and hold down the left click and drag over to M. So we've selected I through M, the entire columns. Right click on the selected area and hide it. So I'm going to hide that selected area so that we have this information right next to where we're going to post it and where the information is. And then we're going to do the same for the government-wide activities. We're going to hide the columns, column X through AE. So I'm going to select column X and go all the way through AE, I believe it is, and then, or it's AB. And then right click on the selected area and hide. So we're going to hide that information. So now we have the data entry right next to where we will post it. Now let's take a look at the first transaction. It says we issued bond anticipation note for capital project. Now we're actually going to scroll over to the governmental activities because that's going to be on the accrual basis. We'll take a look at that first, and then we'll jump back over here to the capital projects. So we're going to scroll over to the government-wide activities. So the first thing we're going to do is debit cash. So this is a form of financing. Note, we can think of the bond anticipation note as basically we're getting a note before we issue a bond. So we're going to finance the bond shortly. We're going to get a short-term note until the point in time that we finance the bond. So we're going to say that the cash is going to be increasing. The other side is going to go to some type of liability. It's going to be called the bond anticipation note. So the bond anticipation note payable will be the credit. We'll pick up the amount in U3. So within U3, I'm going to say equals and scroll back to our amount at 110,000. That's going to be the debit. That's going to be the credit. So let's go ahead and post this out. It's going to be fairly straightforward within our more accrual accounting method. We're going to post this then to our worksheet. So we're going to go to cash first. That's in AE3. Within AE3, I'm going to say equals. Scroll back over. We're going to pick up that debit of 110,000. Then we're going to pick up the other side, which is in the bonds anticipation note payable. That's going to be down here in cell AE9, where we say equals, and scroll back over, and we're going to pick up that credit increase in the liability, and that'll put us back in balance. Now we'll scroll back over and we'll do the same journal entry for the capital projects fund. So we're going to start off with the same format, of course, that being cash. Cash is going to be increasing because that's the point, we're financing the cash. Now the other side is going to be a bit different, however. We're not going to have the liability to the bond, to the payable, the note payable. Instead, we're going to be posting it to a kind of income type account, which is going to be other financing sources, proceeds of bonds anticipation note. Now, the reason we're going to do that, because remember that we're on a modified accrual basis for the Capital Projects Fund, and although this could be thought of as short-term, we're really only short-term in order to get bond financing. So it's not like we're going to pay it off with revenue soon. It's a short-term loan in order for bond financing. Therefore, we're not recording it under the kind of short-term cash flows of the Capital Project Fund, which doesn't typically have long-term assets and liabilities, but only current assets and liabilities. So here we go, 110 debit, 110 credit, and then we can post this out. So we'll post this to our worksheet. We are in P3, posting the cash first, equals, and we'll scroll back over and pick up that 110. And then we're going to scroll down to the other financing sources, proceeds of bonds anticipation note. That's going to be in P11. Within P11, we're going to say equals and scroll back over to the credit, pick up the credit. That then puts us back in balance. So let's go back over, see what our next transaction is. We are now on number 2. We can actually, might be a good idea to highlight these as we go and say that one's done. I'll make it green to indicate that it has been completed. Number 2, architecture and engineering costs vouchered for 2 projects, Project B and Project F. Let's do this first in the government-wide type activities. That's going to be closer to the accrual basis. And notice when we're using accrual, we're using a construction type basis for it. So we can think of kind of like a job cost system typically. And so therefore, this is construction costs. So what we're doing is we're making something. So we're going to put it into an asset type of account and like record the work as an asset until the asset's done. If it's like a building or something like that, we're going to record the work as we build the building into the asset account, not expensing it. And then once it's completed, we'll take it out of that in process account, work in process, and we'll put it into whatever's made. If it's a building, the asset of. Okay, so we're going to debit then the construction work in process for the related processes or projects, which is project B and F. And then the other side is going to go into the voucher payable, because now we have these contractors that we're going to pay. When we pay them, we're going to credit, the cash or the payable at this time, and then we're going to put the other side into the construction work in progress, the asset account. So that's going to be the $30,500 on the debit, and on the credit, I'm going to say negative sum is going to be our plug formula on the other side, picking up the other side, that being the $61,000. Now we can go ahead and post this out. So we got the construction work in process for B. Scrolling back over, there's the construction work in process. We are in cell AE4 equals, and we're going to pick up that $30,500. And then we have for F, and that's going to be in cell AE5 equals. Scrolling back over, and that's going to be the $30,500. And then we want the voucher payable, the liability. So voucher payables up top in AE7 equals, and we're going to scroll over that 61,000. Now we'll do a similar transaction in the capital projects fund. So we're going to scroll back over to the capital projects fund. We're not this time going to have the assets for the work in process, but we're going to put it into the expenditures. So now we're going to have expenditures because this is short term. This is recording the flows. We're not recording the long-term assets of the construction work in process. We're going to be recording the flows. So we're going to say equals, and we're going to go down here to the expenditures, and we're going to have expenditures for Project B and Project F. And this is, of course, the flows that we're tracking, the expenditures related to the capital project here. And those are going to be equal to the $30,500 and the $30,500, and then the credit negative sum, the plug formula, will then be $61,000, and that then go into vouchers payable. We do have a vouchers payable because it's a short-term or current type liability, and therefore on the modified accrual basis being used here in the fund accounting for the capital project fund. So here we have this item. We're going to post this construction expenditures project B, and we'll be down here in P17. So within P17, we're going to say equals, and we're going to scroll back up to that $30,500. And then we're going to be right below it in P18, where we will say equals, and scroll back up to the capital projects for Project F, the $30,500. Then finally, we're going to pick up the vouchers payable. Vouchers payable is going to be up here in P4. Within P4, we will say equals, scroll back over and pick up that $61,000 for the voucher payable there. That then putting us back in balance. Let's see what we have next. So we're going to scroll back over to our data. I'm going to say we're going to make this one green. So we've done that one. That means we've done it. And now we're going to go down to number 3, which says we have the construction contracts. So construction contract. What this means is we have gotten the contracts from the government. We've contracted with contractors to work on the projects at this point in time. So at this point in time, it's kind of similar to sending an invoice out. We haven't really done anything for financial transactions yet, but we've agreed to have a contract. So there's not typically anything recorded under a normal accrual standpoint. Therefore, if we go to the government-wide type of activities and we're in number 3, we're in column T, there's going to be none here. No activity, no journal entry in that area. But if we go back to the fund accounting for the capital projects fund, we're going to record this in a similar fashion as we would record like a purchase order type of transaction. It's an estimate that's happening. We want to be more transparent. We want to show, hey, we've already committed in this format, and the account we're going to use to do that is going to be the encumbrances. And again, I would think of the encumbrances as like a holding expenditure type of account, like expense type of account, that we're going to put stuff in until we qualify for the expenditure under normal accrual or modified accrual conditions. So we're going to debit then the encumbrances accounts for B and F respectively. So there's B, and then we have F, and then we're just going to credit the related encumbrances outstanding account. So we're going to credit encumbrances outstanding because that's that account in what would be kind of like the equity section if it were a for-profit organization where we put stuff when we kind of make up a new transaction that's not normal accrual accounting. We got to put the other side somewhere. That's where it will go. So then we're going to say the encumbrances debit to B is going to be that 20,000. Then we've got the 10 or million and 20 million, and then the 10 million for F. And then we're going to say the negative of the 20 and the negative of the 10 for the other side of them both. Then we can post this out. So we got the encumbrances for B. Let's go and post that one first. We're in encumbrances. That's in N, and we want to be in P13. P13 equals, scrolling back over to the 20,000 so that we increase that amount. Then we're in encumbrances for F. So then we want encumbrances for F. We're in P14 equals, scrolling back over, we want the 10 million. And then we're going to go to the encumbrances outstanding for B. So let's start with encumbrances outstanding for B in P8 equals, and scrolling back over, we want the credit now of the 20. And then we want the encumbrances outstanding for F. So scrolling back over, we're in P9 equals, and we will pick up the encumbrances outstanding for F. And there we have it. So notice these will always be kind of equal and opposite, or exactly equal and opposite, the encumbrances and the encumbrances outstanding. And we'll reverse this once we get to the actual recording of the expenditure. Back over to our data, we're going to say highlight these items and say we have completed up to that point. We are now on number 4. We have bonds issued. We have the face amount. It was issued at 101 and the rate 6%. We're going to record this first to the government-wide type of activity because that's going to be more closer to what we would expect with normal financial accounting because it will be on the accrual basis. So we're going to scroll back over and we're going to say that this is a financing format. We're going to get bond or cash. That's what we're getting for the bonds when we issue them. So cash is going to increase. So that's going to be the debit. Cash is cash. That's nice and easy. So we're good on that. And then the other side is going to be kind of a liability. It will be a liability because it's similar to a note. We're taking a bonds payable. That's something we're going to have to pay back in the future. We're going to call that a bonds payable. And we're issuing it for something that is greater than the face amount. That means we're going to have a premium as opposed to a discount. So we're going to have the premium on the bond payable. Let's go ahead and pick up these numbers then. We're going to say, let's start with the bond payable. We are in V13. I'm going to say negative instead of equal so we can flip the sign. I'm going to scroll back over and pick up the face amount of the bond. That's that 29 million. So the 29 million face amount of the bond. And then the cash that we're going to have, we issued it for 101. That means that I'm going to say negative instead of equals of this number times 101% or 1.01. 100% and 1%, 101%. And then the plug formula, negative sum of these items, and that gives us the difference that we need for the debits to be equal to the credits. So then we're going to post the cash first. Let's go up to the cash up top. We are in cash in AE3. And I'm going to use the keyboard this time to go into it because something's in it. I'm going to say F2 plus F2, then scroll back down, and we want to pick up that cash amount of the 29,290. Next item we have is the bonds payable. So bonds payable, we're going to be here in AE10 equals, scrolling back over, we want to pick up that 29, and then under that, we're going to have the premium on the bonds payable right underneath. That's going to be in AE11 equals, and we'll pick up that 290. So there we have that. That then puts us back in balance. Let's scroll back over and see what we're going to put in place with the capital projects fund. So now we're going to do the same items for the capital projects fund, but we're going to put the bond on the books. Cash is going to go up, so we'll increase cash. we issued it at a premium, and we're only going to be allocating to the capital project fund the face amount of the bond. The difference having to do with interest is what we're then going to be using to finance, and we'll deal with that in the debt service fund. So we're only going to be putting then in the capital projects fund the amount of the face amount of the bond. Now remember, if it was less than the face amount and we had a discount, then we probably have to put it on the books for the lower of the cash as compared to the face amount. But this time we had a premium, and therefore we're going to have the lower of the cash or the face amount, in this case the face amount of the bond. So there we have that, and then the other side is going to go to other financing sources. We're going to say this equals other financing sources, and we got the proceeds of the bond. So there we have that. Then we can post this. Here's the cash. We're going to scroll over to the cash, and that's going to be up top in cell P3, F2 plus F2, and then scrolling back down, we want to pick up that cash amount. And then the next item is the other financing sources. So other financing sources and proceeds on the bond. So that's going to be here, other financing sources, proceeds on the bond. We're in P12 equal to, we're going to pick up the other side, 29,000. And there we have that, increasing it, putting us then back in balance. Let's see what the next item is. We're going to scroll back over, make this green, say, hey, we've completed that. So we're going to make it green as we do so. Number 5, we have the paid bond anticipation notes outstanding. So you'll recall we set this bond anticipation note, and that's because we anticipated the financing from the bond, which we have now gotten, and therefore we're going to pay off the bond anticipation note. We're going to say that the note is for 180 days, and we're going to estimate the number of days in a year, 360 as opposed to 365. So that's just 12 times 30. 360, 12 months times 30 days, easier to estimate with, and that's what we're going to use. So we're going to pay off the note. Let's do this in the government-wide activities first. So we're going to scroll over to number 5, government-wide activities, column T. We are on T16. We're going to say that this is equal to, and we'll scroll up to the bond anticipation note. So the bond anticipation note is here. It's on the books at 110,000. It now needs to go off the books because we're going to pay it, and it goes away when that happens. So it's going to be a debit of 110,000, and then there's going to be an expense of the interest. So we have interest expense that we're going to have to incur for the time that it has been outstanding. We're going to record the interest as, I'm going to scroll back over and just check this out again. So we're going to say that the rate was 8%, so we're going to say it's 110,000 times 8% times 0.08, and that's going to be the 8,800. That would be for a year, and we had this for 180 days. So I'm going to break this down into a per day amount then. We're going to break it out into a per day, assuming there's 360 days in a year, 12 months times 30, as opposed to 365. So we're going to divide by 360. That's per day interest times 180, and that's going to give us our interest amount. So let's do that again with a formula over in our Excel sheet. So we're going to say here in U17, this will be equal to the 110,000 times the rate. I'm going to scroll over and pick up the rate, which was 8%. And then we're going to take that and divide it by the number of days in a year, 360. And then we're going to multiply it times the number of days in the loan, 180. And there we have that. There's the 4,400. Then we're going to take the negative sum on the credit side, the negative sum, the plug formula, and that picks up the credit. 114,400. That's how much cash we're going to pay on the bonds anticipation note payable. So there we have that. There's our journal entry. We're going to post this one at a time. We're up top. We're going to post the bond anticipation note, the liability first. So here we are in cell AE9. Something's in it. I'm going to use the keystrokes to do this now. So we're on, I'm going to say F2 plus F2. and then scroll back down, and we want to pick up that 110,000. And then the next item right underneath it is going to be the interest. So we want the interest expense. So we're going to be in AE16 equals, and we'll pick up the interest expense. And then we want to pick up the cash. So cash is going to be up top. So we'll be in cash. We're in AE3. I'm going to do this with the keyboard again. F2 plus F2. Scroll back down, and we want to pick up that 114,400 and enter. So there we have that. That puts us back in balance. Only thing on the income statement or income statement type accounts, the temporary accounts, being that 4,400 related to interest. So now let's go back and see the same type of activity on the capital projects fund. So we're in the capital projects fund. Now we know the cash is going to go down, so that's one thing we can at least know. I'm going to put that on the bottom because it's a credit, and so I'm going to put it down here on the bottom and say, well, cash is going to be the same. And then the what we had is the bond going off the books. Now we don't have the bond on the books because we didn't put it on the books because it would be a long-term type of thing because it was then going to be financed by the bonds. So we don't have the liability on the books. What we did, you'll recall, is we put it on the books at this other financing sources. So what we're going to do now is net that out against another account called other financing uses now. So we're looking for other financing uses, and that's going to be the retirement of the bond. So other financing uses, that's where that 110 is going to go. That's going to be equal to the 110. And then we're going to have the interest. That's going to be similar to what we had before, except now we're going to call it an expenditure as opposed to simply an expense. Let's calculate the interest again because that was good times last time. So we're going to take that 110,000. We're going to multiply it times the 8%. Then we're going to divide it by the number of days in the year, 365. Multiply it times the number of days in our loan, 180. Let's point to it because that's best practices. And there we have that negative sum plug formula, and it's going to be this, and that's going to be the cash. So let's go ahead and record this out. We have other financing uses. Other financing uses, that's going to be here in cell P15, where we will say equals, scroll back over and pick up that 110,000. There we have that. Then underneath that we have the expenditures. Expenditures is in P16 equals, scrolling back over, we're going to pick up that debit and enter. And then we have the cash. So cash is going to be the credit. Scrolling back up, we're going to pick up the credit in cash. That's in P3. Going to do this with the keyboard by saying F2 plus F2. Scrolling back down to pick up that final amount, the 114.4. And there is that. That then puts us back in balance. Let's see what we have next. We're going to highlight number 5 because that has now been completed, and that's what we're doing at this time when we finish stuff. So now we're on number 6 as invoices received for P project. So we got invoices for P project. We can assume that the invoices came from, say, the contractors or something like that because the work is being done for the projects, because our 2 projects that are the capital projects, like the big projects that we're doing, are B and F. Let's go ahead and post this then as it would more normally be posted under an accrual basis, which was used on the government-wide activity. So within the government-wide activity, we're going to post this stuff out. It's going to be similar as if we got an invoice on a construction project, and anytime we make something like a building or something like that on an accrual basis, everything basically, for the most part, gets billed to the work in process, an asset account of the building. So we got invoice for the project of the building. We're going to put it into this work in process as the building is being constructed, work in process B, and then we'll also debit the work in process for F. And then we'll pick up those 2 amounts, which is going to be equal to, scrolling back to the left, we're going to pick up the amount of the 12. And then right underneath it, we're going to say equals, scrolling back over and pick up the amount of the 3. And then the credit is going to be the negative sum or the plug formula, which I would call it, of this item. That's going to be the 15 that we're going to need. And that's going to go to the some type of payable account. So we're going to put this to a payable account. That's going to be somewhere in the orange areas. We're going to put it to the contracts payable. Contracts payable, that's what we'll use. So then we got the work in process for B. Let's go ahead and post that. If we scroll back up for the work in process for B, it's going to be an asset account. We're going to be here in AE4. Something's in it. Going to go into it. I'm going to use the keyboard to do that. F2 plus F2, and then scrolling back down, and we will then pick up this amount. Then we're gonna pick up the item right underneath it. Construction work in process for F right underneath it. So here it is here. Here it is here. We're on AE5 F2 plus F2. Scrolling back down, and we're gonna pick up that item. And then we've got the contracts payable. Contracts payable. And so that's going to be in the liability area. We have the contracts payable in AE 8 equals. Scrolling back down, and we're going to pick up that 15. So there we have that. That then puts us back in balance. Now we'll record the transaction in the capital projects fund. So we're back in column E, and we're on number 6. So we have the invoices. We're first, before we record this, we now are going to record the expenditures because we're in the short-term activity for the modified accrual basis. But before we can do so, we need to reverse the encumbrances. So you'll recall we recorded these encumbrances. Now we've got invoices related to those encumbrances, and therefore need to reverse the encumbrances so we can record the invoice. So a couple strange things happening here. One, we had the encumbrance, which is a holding account, which we need to reverse. The others were recording an expenditure for something that you would think would be an asset because we're building a capital project, and that's because, of course, this fund in and of itself, capital project fund, is tracking the flow that it takes for us to construct that. So first we're going to reverse the encumbrances. So we'll do that first. So we're going to debit the encumbrances outstanding for B and F. So here's the encumbrances outstanding for B. We're going to debit the encumbrances outstanding for F. And we'll pick up these amounts, and those are going to be the debit amounts. And we said the encumbrances are going to be for the 12 and the 3. So we're going to reverse that, and then the other side, which is going to go to the encumbrances. So we're going to scroll back over. We're going to pick up the encumbrances for B and encumbrances for F. So that's going to be the credits. So then we're going to say negative of the 12, negative of the 3, and that'll give us our credits. So let's record this. We're going to go to the encumbrance outstanding. So we're going to scroll up to encumbrances outstanding. So we are here in P8. Something's in it. Going to say F2 plus F2. So we're using the keyboard, and we're going to scroll back down and pick up the 12. And then we're going to go right below that. We want to pick up the encumbrances outstanding for F. Scrolling back up, we have the encumbrances outstanding for F. We're in P9, F2 plus F2. Scrolling back down, encumbrances outstanding for F, enter. And then we want the encumbrances for B. So we're going to scroll back up, and we're going to pick up the encumbrances. Going to reverse that in P12, F2 plus F2. Scrolling back down, and we'll pick up that credit, enter. And then under that, we have the encumbrances for F. So scrolling back up to the encumbrances for F in P14, F2 plus F2. Scrolling back down, and we'll pick up the 3, and that'll put us back in balance. So we're back in balance here. And then we need to record the other side of it, which is going to be the expenditure that we want to put it into. So now we're going to record the expenditure. We've reversed the encumbrances, now recording the expenditure. So this will be equal to the construction expenditure for B, and this will be equal to the construction expenditure for F, and then we're going to put the difference into the payable, this being a short-term payable, and therefore it's going to be on our fund here, which is on a modified accrual, and we're going to put it into the contracts payable. Contracts payable. So this is going to be equal to the 12. This will equal the 3. This will be our plug formula, negative sum of these, and there we have it. So let's record this out. We're going to say construction expenditures for B. So I'm going to scroll back up and pick up the construction expenditures. That is in cell P17. I'm going to say F2 plus F2. Scroll back over, and pick up that 12. And then right underneath that, we're going to have the construction expenditures for F. So that's going to be right underneath. So we are in P18, F2 plus F2. Scrolling back down, picking up that 3. And then we have the contracts payable. So contracts payable, scrolling back up. We want the contracts payable. And that is in P5 equals. And then we'll scroll back down and pick up that 15 and enter. So there we have it. We're back in balance. Looks good. Let's see what the next one is. I'm going to make this green. We've completed that one, so I'm going to make it green. Then we have grant funds received. So grant funds received, number 7. Let's put this in the government-wide activity first, although the transactions will be much the same between the two. So we're going to be over here in column T. Going to scroll down to number 7. So we're going to get money. So money's going up. So cash is going up. That is good. We're going to say the debit, the one on top, item, cash is increasing. Other side is going to be some form of revenue. So we're going to say the other side is some form of revenue. And that's going to be revenues, economic development, capital grants revenue. And so there we have it. Now we'll just pick up the amount, which will be equal to, scrolling back to the data. That's going to be the 1,000,001 in our case. That's going to be the debit. That'll be the credit. So there's going to be our transaction. We're getting a grant, and therefore it's coming into the government. It's going to be revenue for us, cash going up, some type of revenue account going up. That should look fairly straightforward with comparison to an accrual basis. Let's record the cash. I'm going to scroll back up. We're going to put our cursor in AE3. I'm going to say F2 in the keyboard plus F2. Scroll back down, and we will then pick up the cash of the 1,1. And then the next one, we got the revenue, economic development. So that's going to be up top in AE15 equals. And scrolling back down, we'll pick up that credit and enter. So there we have that, and that puts us back in balance. Now we'll do the same thing for the capital projects fund. So now we're in the capital projects fund. We're in column E. We're down here on number 7. So once again, cash is going to be increasing. It's going to be looking very similar here, similar transaction under the two items, the two areas. And then the revenue is going to go up. Only difference, the revenue, we're just going to call it revenue here. And then we're just going to say the amount is going to be that 1,1 debit and credit. So there we have it. Let's go ahead and post this out. Here's our cash up top. We're going to scroll up top. Now don't get confused. This is the closing entries that we'll do later. So we're not there yet. We're going to go up top to P3. I'm going to say F2 plus F2. Scrolling back down, and we want to pick up the cash. And then the next one we're going to pick up and post out is the revenue. So revenue up top is going to be in P10 equals, and we'll scroll back down and pick up the revenue item. There we have that. That puts us back in balance. We're going to unhide these cells and continue on with this problem next time.